Good day, all. Ira Epstein of Linn & Associates with your metals market update, and we are now on Tuesday, the 5th of March, 2019, getting on to 2:30 p.m. Central Standard Time. We're about 2:27 right now. You know, this is what I hate about when they give you the settlement time in the metal markets out of New York, basically at 1:30, and they'll trade to 5 p.m. Eastern Time or 4 p.m. Central Time, because gold actually settled around 1284.50. Silver settled closer to 1510 and a half. And the coppers, you're close to it. You're not too far away from it. But you're going to look at this action one way, and then the settlement prices are going to be lower in these markets than you're at right here, which throws the charts off for you. Then when they reopen, the market will look at the last trades of the session and probably advance to that. The interesting part is that with the dollar having a good rally today, a new high for this leg of the upside, not a new high for the dollar index, you're still able to get a good rally out of the metal markets. Now, as we take a look at what's going on the weekly chart, you're down about $10 for the week, even with this rally that we're getting at the end of the day. As we look at the April gold, I'm telling you, it actually closed under this level today. It's going to be down on the day. Yesterday's price was 1287.50. I think we had a lower close today. But it doesn't matter. We'll see how the action is between now and tonight. All that we're seeing here still is a continuation of this thrust to the downside, where gold lost tremendous favor. I even saw how much the open interest, if you will, the shares in the ETF GLD did, and they'd taken a beating. So there's been some big dumping of positions in this market. Now, where the market's trying to grab traction is probably a combination of the 100-day average, which it has not gotten to yet, and the lower Bollinger Band. And that's why I think the market's coming up right now. With the settlement today, you're going to have another day under that band, but when you reopen tonight, you may well be over it, especially if the market stays in this neighborhood in the next hour and a half. And with a lower close today, you keep your eye on just what that's doing. In terms of momentum, you're oversold. So what I think is what I said yesterday. I'm looking for support to develop somewhere between these Bollinger Bands and the 100-day average, and that's what I'm telling my clientele, basically, that that's what I'm looking for that to do. I am not in the camp that is bullish yet. In the GLD, this is still open and not with the settlement price, so we're getting an idea here. You can see how the market has been riding this lower band. If we go to yesterday's range, if I can get the chart to move on me, let me bring it back here, probably do it right here. Here we go. Yesterday's range was 121.85 as a high to 121.18, and today you have gotten under yesterday's low, but you haven't taken out that high. If the market's truly trying to put in a bottom, I'd look for something in that neighborhood soon where the market tries to get away from here. Otherwise, like the futures, the question is this a support, or is the market going to leak away to the 100-day average? When we come over to GDX, it's a little more definitive. This market's had a downtrend, had a leg, and the leg went to the lower Bollinger Band and stopped. That's all there is to it. That does not mean the market's bullish. It just means the market hit a downside target and it's getting a bounce away from it. Resistance is back at 22.39 and you are oversold. In fact, in most of the metals, you're in oversold territory. Here you've got the gold-silver ratio, which is trying to give back something in favor of silver over gold. And where silver's fighting its battle is the 100-day average in green of closes and the lower Bollinger Band. And I think you can see how now that battle's shaping up right through here. I'm still looking for that to be very much the battleground. If you rally because you're oversold, you still have resistance wherever that 18-day average comes in. In the copper market, I am concerned about this in the market. While the market is counting on the good things out of China and so on, when a market loses its embedded reading, as this market did, you can see, I'll show you where the embedded is. Do you see how the numbers here are both over 80 and they're over 80 that day and over 80 that day and so on? That's called embedded. It's locked in. And when that happens, it is common for price is to try to move to the upside. I can't use the word thrust, but I can say move to the upside, and it tells me that I think the pros are buying the market. When you lose that reading, and you lost that reading yesterday, even though you get a bounce back today. You were down 230 yesterday. Right now you're up 295. So what? You still lost that reading and you can't get it back. Often price and the 18-day average come together, so I think this rally could be a trap for those getting too bullish up here, and I'm still looking for prices to try to another downside. By the way, I'd be wrong if you take out the most recent high in the market. In the platinum market, I've been looking for price to sink back to the 18-day average of closes. The very interesting part here is you see how the 18-day average was under the 100. Here's a market with an embedded reading. It loses it. That's fine. Now keep your eye on these numbers. Now you're getting a crossover where the 18's over the 100. Ideally, you'd like to see prices get down to this, get out of this situation where it's now overbought, and try to fight a battle at those numbers. We'll see if that happens. That's what I think as a chart technician. In the palladium, this is a big warning sign, and I think I said this yesterday. Here's a market again with these embedded readings. You can see how they're just going sideways over 80. Yesterday, on the close, you held it. Today, you lost it. Now, this market, as I said, I think I said it yesterday, is showing the first signs where maybe a correction's about to hit. And we haven't seen any form of a real correction in palladium for a while. You had one little break back here to the 18-day average, and then it moved on. I would not be surprised that if the market is not up strong tomorrow, and I don't expect it to be, but if it's not, then I'm looking for price to reach the 18-day average. For those long this market, it's a warning sign across their bow. In the dollar index, this is what I was saying. You've now got the highest rally from these lows. You're back into a resistance zone where we failed there. We failed in this area before up here. Will the market go anywhere? Is this the area that finally the dollar starts weakening a bit? The ISM data today that came out in the dollar for the service sector certainly looked pretty darn good. So I'm just looking at things and saying to myself, boy, if the ISM data is good and you're still firing on all cylinders, that just keeps the dollar in a winning position. Is it trending? No. This is a thrust that happened after a downtrend, got to the lower Bollinger Band, got back, fought a battle, got to the 18-day average, stalled is really the better way to say it, moved through that high, and it hasn't looked back since then. It caught this group of people as you broke the pattern of lower highs, lower lows. Well, I talk about all this, and I think we do an awful lot of it in the morning in a video where I'm able to cover roughly 40 charts, and I'm able to say buy here, sell there. Not this is what I think the pros are going to do and the other things. And there's a big difference between the two. What I do in the videos that you see here on YouTube is I'm certainly not going to make a trade recommendation there. This is where I'm going to make them. I'm going to make them in my 40-minute videos, and I'm going to throw them out as I see them over and over at you, the reasons why as a chartist, what's covered. And I cover all these different sectors. You know, in the futures market, there's about 40 important charts as I see them, and you're able to take the charts and drag on the bottom, go to the section you want, or just watch the whole thing. I will talk to you about the chart action, what I think the pros are doing, the technical and fundamental picture that's there on the market, and if there's morning fundamentals, I'm going to throw them at you, and I'm certainly going to throw out trade ideas. So, to get it, what's it about? The idea here is that if you're on your own thinking about a trade and you're looking to bounce it off somebody or an idea, that's what it's all about. I'm trying to offer that as though we were sitting together. Now, I haven't held my webinar, and that's going to be next week, I'd say, and that's where you get to come in and actually ask questions and so on of me. Our price for this, $7.95 for 30 days, roughly 26.5 cents a calendar day. And after that, you decide if you like it or not. You can buy a one-year subscription, which will not be $15 for every 30 days. It'll be in the $13 range, and away you go. How do you get this? Give us a call. You can go to our website under the word education or research. Go to morning subscriber video, click on it. You're right there. I'm Ira Epstein. You have a good day, and I'll see you tomorrow.